Short-term investments. There are certain occasions when a company possesses excess of cash that will not be used for a period of time. It has to be less than a year. In order to generate interests and increase that amount, there may be some short-term investments that can either be stocks or bonds. Okay? The stocks and bonds are also called fixed income if we're talking about bonds, or variable income if we're talking about stocks. Okay, that is very important to remember. A company, when they have extra money, they can either invest in short-term investment or long-term investment, which we will see later on. If we are in the short-term investment, there are two options, stocks or bonds. Okay, if you invest in a stock, then we are talking about it depends on the dividends. It is a variable. Okay, it is a variable income investment. And if we're talking about bonds, then we are talking about a more fixed income. Okay, then again, you have extra money, long term or short term. We're now going to talk about short term. There are two options, stocks and bonds. Stocks as variable income, and bonds, you have a more fixed income. Okay? Short term investment in stocks. Any company can purchase other companies' stocks short term, which means the money can be recovered within a year or less. If so, the retribution will be in the form of dividends. Now, there are two conditions for you to receive them. One, that there are retained earnings here, and that the 51% of the owners decide to share in the form of dividends. Okay? That is why short-term investment in stocks is considered to be a variable income short-term investment. The amount of money to pay for a stock will be the purchase price. Pay attention on this part. The amount of money to pay for a stock will be the purchase price plus any commission or tax to be paid. Since the amount of money earned from a stock is dividend, therefore for the investing company, this is considered as the account called other income. Okay? The market value also increases or decreases the amount of a stock. Let's learn through a example. Now let's go with Berrylicious, my very special company. Let's assume Berrylicious SA bought 12 stocks from the company called Valerio's Palace, which is one of my other examples companies. The purchase was 390,000 colones, and this amount already includes commission. This purchase was made on February the 1st, 2019. Okay, then again, get all the numbers right. 12 stocks for an amount of 390,000. Now let's go and make the journal entry. Let's assume the same information is here. Now the journal entry will be short-term investment in stocks, 390,000 on the debit side against cash, 390,000 on the right, on the debit side. Registration of the purchase of 12 stocks from Valerio's Palace SA. Now, as I told you before, you may either take the money from the bank or the cash. In this exercise, I'm telling you they have extra cash, probably the general cash in the company. Now, what happens on June the 30th? On June the 30th, remember you just purchased this on February the 1st, okay? On June the 30th, Valerio's Palace pays dividends for 3,100 colones each stock. How much you paid for, how many stocks do you have? You have 12. 12 stocks. Therefore, you are getting 3,100 for 12, right? Times 12. Cash, you receive 37,200 colones. And we're going to name the account dividend income, okay, on the credit side. Again, registration of dividend received for 3,100 each stock times 12 stocks that you have. What happens then on July the 31st, 2019? On July 31st, 2019, this short-term investment is sold for 300,000. Register this transaction. You receive cash. How much? 300,000. Okay? Now, the thing is you purchase them at the price of 390 and you're only selling them for 300,000, so you have a loss. How do you call that loss? You call it loss on sale of short-term investment in stocks. 90,000 to the debit side. That way you can credit the right amount on the credit side and make the corresponding names, the cash you received and the loss you perceived. Registration of the sale of the short-term investment in stocks from Valerio's Palace. Now let's go take a look in the short-term investment in bonds. The company may also choose to have a fixed income. If so, then they may choose a bond. A bond is a document with an issue date, expiration date, interest rate, method of payment, and a nominal value. Bonds are purchased at a price of nominal value plus accrued interest. This you have to remember, okay? Bonds are purchased at a price of nominal value, which is what the paper says, plus accrued interests. Why? Because this bond will be on the street. The company who creates the bond issues the bonds and sells it for a price. They will be accruing interest every month, every 2 months, it depends on the conditions of the document, okay? By the time you buy it, if you're the second buyer and you buy it on the street, you have to pay for the nominal value of this document plus whatever interest this document has already earned. Let's see the example. El Rio Property Brokers SA decides to invest with a bond with a nominal value of 100,000 colones. On January 1st, 2008 is when the document is issued. Okay, then again, the document was issued on January the 1st, 2019 for a nominal value, don't forget this word, nominal value of 100,000. Such bond was issued on November 1st, 2017. So it was issued on November 1st, but you are purchasing it on January the 1st, which means that that stock has been on the street, that stock has been moving for quite some time. So with a yearly interest rate of 24% payable semi-annually, which means whenever you read semi-annually, it means it pays every 6 months. This document was issued on November the 1st, 2018. Okay? It is paying twice a year, every 6 months. Okay? How much? 24% semi-annually. And you buy it on November. You buy this file on November. So far it's been December the 1st and January the 1st. This document has been on the street for 2 months already. So this document is worth 100,000, which is the nominal value, plus 2 months of interest that the previous owner deserves to receive by the time he or she is selling the document. Okay? The fiscal year ended on September the 30th. The reason why I am writing this down, it's because I want you, that this was the old fiscal year in our country. It used to end on September the 30th, and I want you to do a closure on that. You have to pay very close attention with this bond, and if you require a re-explanation, go ahead and replay the video. That's why I made this video, so that I am sure you totally 100% understand, and if not, you can review it again. Now, since the company should pay 100,000, pay attention, you are the company. Since you have to pay 100,000 colones, which is the nominal value, plus the accrued interest, this bond was issued on November the 1st and pays interest semi-annually. Then there are 2 months, as I just explained. November the 1st was the origin of the paper, so by December the 1st you have a month. January the 1st you have 2 months. So now you're buying a document which is 2 months old. You have to pay for the nominal value plus those 2 months interest to the previous owner, otherwise you cannot get the file. Okay? Let's calculate how much money is 2 months. Let's calculate how much it is. This bond makes interest payments on May 1st and November 1st. Okay? This is how you calculate the monthly interest payment. Interest per month. How do you know how much money it pays every month? Well, I told you the information. It is 100,000 colones on the nominal value. And I told you it pays 24% semi-annually. Okay, every 2 months you get. Once you combine the 2 months, you are getting the 24%. Yeah, but once you get the two payments, you get the 24%. But it hasn't been 6 months yet. It's only been two. So you want to know how much is 24% in a year, but for every month. So you divide 24 divided by 12. When you get 24 divided by 12, you're going to know how much percentage is actually for one year, 1 month. How many months are there in a year? 12. How much is it yearly? 24. So you divide 24% divided by 12. It gives you 1 month amount of interest. One. And we're looking for 2. Therefore, you take 100,000 times the division 24 divided by 12, and that gives you 2,000. Now, I highlighted here, this is 1 month. 1 month. And you're looking to get 2. Therefore, you're going to multiply that times 2. Since 2 months have passed when the bond is purchased, you have to pay 100,000 plus 4,000 interest for 2 months, 104, and the journal entry would be, for you to acquire this bond, you have to pay the previous owner 104,000. So you take that from cash. Cash 104,000 goes straight to the previous owner so that you can possess the title now. Okay? Now, how are you going to divide that amount into the accounts? The short-term investment in bonds is just worth 100,000. It's just worth 100,000. What about the other 4,000? The other 4,000 is money that corresponds to interests you have not yet collected, but it's coming. It's in the future. It's about to be received. When? On May the 1st and November the 1st. Today, the day we create this journal entry, it is January the 1st. So we still have to wait 5 more months to receive some money, 4 more months to receive this money, okay? So we're going to categorize it as a short-term investment in bonds worth 100,000, accrued interest receivable because you're about to receive this money back, 4,000. When are you going to receive this money back? On May the 1st. The original company will pay the 6 months interest to whoever possesses the file. Whoever comes in with this document will receive the 6 months worth of interest. Whether it's you, him, her, they'll just pay 6 months. You paid in advance the 2 months to the previous owner, but then you will collect 6 months. So those 2 months will get back to you, plus the 4 months you're going to hold the bond. Let's gather the information. Let's collect the interest amount. The date is May 1st, 2018. The payment date has arrived. 4 months after the purchase, okay, because you purchased it on January, so February, March, April, May. 4 months have already passed. You're going to collect 6 months worth of interest rates from that bond you already have, okay? Issue date was November the 1st. The purchase date is January the 1st when you purchased it and you paid for 2 months in advance you're about to collect. The type of interest is semi-annually. The interest rate is 24% yearly. We already know that's 2,000 colones a month. Today's date, May 1st, 2018. Time to collect the first amount. Okay, that is what we have so far. You have to remember, when you purchase these bonds, well, this in singular, you paid 2 months of interests that you have not yet collected. However, the previous owner received this amount for the time he or she held the bond. An account was created back then when you paid for those 2 months. You use the account accrued interest receivable that will now be finally canceled because you will be receiving the entire interest payment. I repeat again. When you purchase this, you paid for 4,000. $4,000 is money that you are supposed to receive when it's coming, right? On May the 1st. You created accrued interest receivable, but now you're going to collect that money. You're going to receive the money. So you're going to cancel that account, okay? You're going to receive $4,000 into that account, and the rest will go to the interest you're going to generate. It's going to be an interest income you're going to generate. You will now be receiving 6 months of interest as if you had had the document since the beginning. Now let's take a look. How much money are you going to receive? How much money is it a month? $2,000 a month. How many months are you going to receive? 6. Even though you have not had the file for 6 months, but whoever possesses this is going to collect the 6 months interest. That's why you had to pay in advance. Otherwise, they wouldn't have given it to you. You held it for 4 months, but you're going to collect for 6 months, okay? You're going to receive 2,000 times 6 months. How much is it? 12,000. Again, 2,000 each month times 6, 12,000. Now, out of those 12,000 that are arriving into cash, you have to pay the receivable account you had created. You have to accrued interest receivable, cancel that account. So you cancel it by putting the 4,000 on the credit side, and the rest of the money will be an interest income. This is the income you are earning right now, okay? Everything goes to cash, of course. Registration of the first interest collection for the semi-annually payment. Okay? This exercise contemplates the fiscal year ending on September the 30th. Therefore, before the next semi-annually payment is due on November the 1st, we have to make the registration of the interests that have been accrued by September 30th, even though the company has not yet collected that money. Again, remember at that year, in the year 2018, our country was having a fiscal year ending in September the 30th. Therefore, by that time, we need to establish this and make statements and have all the numbers ready. So we had to make the journal entry for this bond. Even though we're not collecting any money yet, we have to close it. Every time there's a fiscal year, we have to close all the numbers. So we're going to receive some interest that we have already earned. How many months have we already earned after May? Because remember, we already received money. So we have June, July, August, September. Okay, we have already made 4 months of accrued interests. We were paid on May, so June, July, August, and September. Those 4 months we have already earned. We have not yet collected because it's not pay time. We received the money on November, but now it's September the 30th and you have to close and make journal entries. Okay, so those 4 months, how much is it in money? 4 months in money is 2,000 each. We had already established that. So it is 2, 4, 6, 8, 8,000 colones in interest rates you are going to receive. Okay, so how do we call an account when you're going to receive accrued interests? How do you call it? Accrued interest receivable. Okay, so you're going to establish it for 8,000 and you're going to put it in earned interests. Not earned income. You haven't earned any money yet, but those are interests that you have already earned. Okay? Like if you were selling this bond today, somebody would have to pay you for that money. Okay? Because the same way you paid the previous owner, it's the same way somebody else has to pay you right now. Earned interest, it's 8,000 colones. And you're going to name this registration of the 4 months earned by fiscal year ending. Okay? By September the 30th. Now, let's assume it's November 1st now. November 1st has arrived. So we reach November 1st and we're going to assume now that we are going to collect the money. Okay? That time is when the bond is expiring as well. How much time is a short-term investment supposed to last? Less than a year. When was this bond issued? November the 1st last year. So it's about to expire. So you will receive the interest and you'll take the money back from the bond. You paid 100,000 for that bond. You're going to get it back. Okay? So in cash, you will receive 6 months worth of interest plus the amount of money you paid for the bond plus the 100,000. Okay? So you're going to get 100,000 plus 6 times 2, 12, 112,000 colones for the cash. And you're going to categorize all those amounts into short-term investment in bonds. You're going to credit it now because you're canceling that. So 100,000, let me show you before. When you open the account, you opened it on the debit side. Short-term investment in bonds was 100,000 on the debit because it was being opened. Now it is being closed. Short-term investment in bonds, 100,000 to the credit. Accrued interest receivable, 8,000. Where does this account come from? Remember, you just had to do it on September the 30th. You did it because of the fiscal year ending. So you had to create a accrued interest receivable, 8,000, because you were going to receive 8,000. Now, you receive them, you cancel the account. You create it on the debit, you cancel it on the credit. And the rest, it's called interest income, okay? 4,000 colones, it's the rest that you have to categorize. Therefore, you have 112,000 money that you earned on the expiration of the bond, plus also the collection of the taxes. Okay, this information I put here is exactly the same thing I just explained. Okay, now this concludes the explanation of short-term investment with stocks and bonds.